surge of the U.S. apartment market since 2010 has left few markets behind, but one spot that seemed to miss the wave, Virginia Beach, Norfolk. But we are finally starting to see some encouraging signs from this market. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Tidewater area update. When you look at apartment markets nationally over the past 3 years or so, you could group most of them into one of three categories: a fast growth market, a stable market, or a bubble-busted market that is still struggling to regain its footing. Virginia Beach, Norfolk, though, really doesn't fit into any of these categories. It's really into a category of its own. There wasn't an especially big real estate bubble here, but the apartment market has continually ranked among the nation's weakest in terms of revenue growth and rent growth over the past few years, even though vacancies never got especially problematic. But the market finally posted some strong growth in Q2 of 2013. Revenues jumped 2.8% quarter over quarter. That was the market's best performance since 2005. It was so strong that it was more than enough to wipe out quarterly revenue losses from each of the past 4 quarters, and the gains were widespread among most submarkets and product segments. All good to see. Now let's take a look at some occupancy trends. We are comparing the Virginia Beach, Norfolk area in red to the U.S. averages in purple. And what's interesting is that during the recession, occupancy here didn't fall as much as it did nationally, and it was faster to get back up to the 95% mark. But then, oddly, the market started to tail off again. Occupancy went from 95.2 in Q3 of 2011 to just 93.8 in Q1 of 2013. Now, still not a terrible number, but not a good trend. But then you see that spike in Q2 2013, up 80 basis points thanks to very strong apartment demand that quarter. And what's even more telling and more unique are the trends on the rent change side. You could see rents in Virginia Beach, Norfolk really didn't fall much in the recession. The U.S. overall took a much bigger hit. But as the U.S. started to post big hikes in 2011 and 2012, the Tidewater area just couldn't ride the tide. Pardon the cheesy pun. Annual rent growth here averaged just under 1% during those 2 years, and the number still isn't great at just 1.3% year-over-year rent growth through Q2 2013, well below the U.S. average. But let's look at quarter-over-quarter rent change, and you can see that Virginia Beach, Norfolk posted fantastic growth in Q2 specifically, rents up 2%, and that tops the very strong performance nationally. The U.S. average was 1.6%, so we're above the national mark, and it was the best quarter for the Tidewater area in 8 years, a long time. So what's fueled this strong rebound in Q2? Well, it's only one quarter, and you never like to look too much into one quarter. You want to see a longer trend before you make too many conclusions. But the good news is that the recent job production numbers suggest there might be something to the numbers that we saw in the apartment market in second quarter. Virginia Beach, Norfolk added 15,000 jobs in the past year, its best performance in a decade. And this chart really tells the story. You can see that job growth here was consistently lackluster coming out of the recession until just very recently. And this reflects a couple of things. First of all, the market was hit hard by losses in some very key employment categories during the downturn. The shipping industry endured some sharp cuts, and the market also lost a ton of jobs in the military and defense contractor type jobs, and those put a real hurt on this market. And it's taken a while to replace those jobs. Most of the growth that's coming in is from a broad array of private sector jobs, and definitely good to see that happening. But the question is, can the market sustain the momentum that we saw in Q2? And it's really too early to say with much certainty. Our expectation right now is that it's fairly unlikely that Virginia Beach, Norfolk is going to sustain decade-high job growth levels, but the market should continue to see at least moderate job growth. So as a result, our expectation for the apartment market is that we're probably not going to see a brisk, strong recovery. More likely, we should continue to see, or we should start to see, I should say, some moderate revenue growth over the next year or two. And that wraps us up for the Tidewater area. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.